Time is gone, it's too late. Time is gone for you and me. Time is gone, it's too late. Time is gone for you and me. Time is gone for you and me. Time is gone, it's too late. Time is gone for you and me.
Pretty solid day for the most part, right? I was kind of keeping you guys updated in the predictions chat. If you're able to follow along there, it kind of just did for the most part everything that we were looking for the day. There's some minor things that, you know, it was a little sketch at one point, like this retracement here. My stop was maybe a couple points below, but there's repeatable logic, and there's a logic as to placing stop losses. There's a logic for targets. There's a logic for everything. So when you can memorize that logic and you're able to use it confidently, it's, you know, when these high probability days come, you can walk it like a dog. It's extremely easy, where this day is what I thought was pretty precise. Like, you can call things before they even happen. And we'll kind of walk through the predictions chat messages kind of as you know, as this price action is going on. I also, in the recording for the analysis, I was writing up stuff on the screen, which you saw in some of those screenshots. So those will also be available to you. But as of right now, I have my stop trim to this intermediate term low. We have an inefficiency there. It filled it with a lower time frame breaker in this candle. And then we have a short-term low after that. So if it comes and stops me out, it is what it is. But as of right now, that's where I'm aggressively trimming my stop. That should be left open as a breakaway gap, which also would be about 25% of the implied dealing range. So actually, you can mark this out and line up the 25% level with the consequent encroachment of this gap. And that should give you the projected dealing range, which is putting us up around here. So that limit order that I have currently on the consequent encroachment of the VI should be filled. But anyways, as of right now, I'm looking for 1030 to be the next draw on time as we create the new daily high going into 1030. So we should run that out. You can take that as a partial if you want to. I have mine currently on the hourly swing, the weekly high from 309 If I go to the hourly chart, you can see it over here, but this is the weekly open. You can see the new week opening gap here. This is Sunday at 1800. If you look at the bottom there, and then this was the weekly high here. We traded above the weekly open, and that was the weekly high provided on Sunday, March 9th at 2200. And then we kind of just sold off after that. We never took out that high. So that is a weekly high, and that's what I'm using as my current draw for the last fill. And then I have my last limit order at the consequent encroachment of the VI, the daily VI, which was the draw that I mentioned earlier into the day in the daily bias channel. But logic for the entry down here is a total soup entry. We had SMT. We also had this 15-minute IRL that I said was the potential manipulation target. It dropped into that. And then as soon as I see it starting to react out of that and it's respecting CE, I can get in there. And my original stop loss was below the 15-minute order block mean threshold. So if it continued to drop through that, I wouldn't have liked it because that was already in discount. It's already respecting a higher time from array at a key time. I'm liking that to go long. Then it did trade back up, retraded back into here. And I told you preferably I want to see that upper portion of this wick be used as the breaker. It traded all the way back down into the breaker end, the open. You can see the candle bodies are respecting that open. Also was mentioned in the predictions chat, and then it perfectly just rebalanced the first presentation gap to the tick. Expands up, trades back down into the bullish order block. I was using that as this 945 news basically as inefficient, travels back into it. I was using that as my last entry. Weathering some of this retracement, my stop loss was below mean threshold of the 5-minute order block. Here, tags into it, respects it pretty nicely, and then it starts to shoot up. I got 2 limit orders there off the VI low end, the discount end, and then we're waiting for the rest of them to be filled. And obviously Stap was in great deal in profit, about like 50 points in profit or so. So I'm not worried at all about this trade. It's a free trade at this point. But I hope you're able to follow along. I know the macro entry in this case was a little bit harder. That's what I was favoring for the day. If you go back all the way to the top of the predictions chat, and really in the daily bias chat as well, go to the top of the predictions chat and you can kind of scroll down and look at what I was looking for. But this is what I mentioned for today. So I'll cover the bias and why I was looking for this specifically. But you can see the 15-minute BISI potentially as manipulation target, etc. Looking for a standard macro entry long if it is provided to me, up to the buy side and calling it a day. If not, I'm going to use a silver bullet. I don't want to be waiting until the 1050 macro today. It's either going to be an early entry and it runs to the buy side or nothing for me. Plenty of opportunities this week. Currently below both the 9:30 and 9 a.m. opening prices. Would like to see the 5-minute expand and then offer a 1-minute entry. So we got that 5-minute expansion in here and it drops back into that. Now on the 1 minute, you don't have any inefficiencies besides there's your new high, by the way. So that would be a nice, we'll sell one there. There you go. All right. So new high, post 1030, time-based execution there. Obviously you could hold it till the buy side there. It doesn't really matter too much, but in this case, you don't have a 1 minute gap over here, right? If I remove these annotations, I'll skip the BISI on. There's no inefficiency in here. And I talked about this 945 wick being inefficient, but it's somewhat hard to use. You got a VI there, tiny VI in the short-term dealing range discount below there. So that would be, the entry paired with the order block, like the best case entry. Obviously, we're not going to be able to spot that sometimes while it's happening live. So the 5-minute inefficiency is going to be the entry point for the macro time. Whenever you have a 5-minute entry, obviously the stop loss is going to be quite large, but then you also have to remember the TP should be equally in distance. So whenever you're using a 1-minute entry, if you're getting in here, your stop loss is going to be tighter and your take profit is going to be tighter, and like a very scalpy kind of entry model there. When you have a 5-minute entry, I prefer if it's a larger range that I'm trading on. So even though the stop loss may be larger in points, the TP should be larger in points by contrast. So this kind of entry during the macro time in a 5-minute gap, you're not going to see it a whole lot, but it will offer itself. So this is why you're constantly trying to refer back to the 5-minute and the 15-minute to see is there any inefficiencies, is there this, and this. And that's why I'm also using the 5-minute as my preferred stop loss placement on this kind of day. Because if I'm using a 5-minute entry, I'm not going to be using a 1-minute stop loss. You can if you have a very precise stop loss placement, but just to kind of keep things safe and require the least amount of mental capital for me, I'm gonna just place it on CE of that, or mean threshold of that 5-minute order block, and call it a day, and then kind of just let it ride and see what it wants to do. So as you're within this retracement leg here, we got this SysD through there, and that to me kind of confirms, okay, we're trading into a higher time frame PD array, and the fact that we're trading into the 5-minute. It trades through that with displacement. That to me, I mentioned in the prediction chat, I'm like, that's GG's, which is stands for good game. So in that, I'll share this screenshot here, but it's also in the recording if you want to go back and watch. But this, once I saw that SysD close through, we've got this low resistance liquidity run signature. That to me, it was okay. This trade is most likely going to be correct, and I can stop loss trim from where it was originally to that swing low, and also a little bit higher up. Now, this is where, for those who do not know what a propulsion block is, I just want you to kind of not listen to this. Not listen, but don't worry about it too much. But for those who are more advanced and have been a while, okay, I don't know why it's doing that, who've been around ICT concepts for a while, we have a bullish order block range, and it trades back into it. These last two down closing candles, once it's kind of traded through, that becomes your propulsion block. So you don't want to see mean threshold of the propulsion block even traded to, and propulsion blocks are basically your breakaway gaps of order blocks. So I can trim my stop to there, I can trim my stop to there, I can trim my stop to there. I had it at this point, this swing low at one point, because that's a very safe spot in my mind. We already filled the entire 5-minute gap, so it's efficiently delivered. We're trading into a bullish order block, and we're creating a propulsion block. There's absolutely no reason as to why we should take out this low, or trade down to here, or take out this low. It's already efficient. So in my mind, that's where I can aggressively trim my stop to there from wherever it was originally. And then when I hit the TP, I can trim it again to this swing low, which is an intermediate term low that I already covered earlier in this stream. So if it comes down and runs that out, I can expect that. I've mentioned this before in past live streams, but intermediate term highs and lows, when we have a very clean market, not when price is consolidating, obviously, but when price is trending and it's actually reversing and providing elements of clean PA, intermediate term highs and lows are probably some of the best starter stop loss placements that you can get. Reason being, intermediate term highs and lows are your true market structure shifts. So when I see price displacing through a intermediate term high or low, whether it's on the 1-minute or the 5-minute, that's a very early and strong indication that prices may be going to reverse or enter into a new stage of delivery, i.e. a retracement. So in this case, I'm anticipating that the element of price action, the stage of price delivery right now, is expansion, right? We already had this retracement back into the dealing range discount, dropped into discount. What are we going to do again? Expand. If we're expanding, what's the PD array that price should be holding? Bullish order blocks. So in my mind, there's absolutely no reason we should be shifting below here with displacement unless price is entering into another reversal or retracement. And I don't want to be weathering another retracement down into here or into this gap or further down, because then in my mind, the draw on liquidity for what I'm trying to get on is wrong for that current time. Okay. And that's why 9:30 executions sometimes are more difficult, because you may be wrong on the time element where it drops down into here. I got pretty close to low of day, like on the candle, about 1 minute away. But if you have not seen them enough, you're not going to know what is the true manipulation and what isn't. Like in this case, when we're tagging this and there's no SysD out of that, it's much harder to trust. And I want to see the SMT as well. When I see that SMT print, then I can gain a little more trust into the execution, as well as other different stuff that's covered in the PDF I'm not going to cover here. So as of right now, you can see, if I go to the 5-minute, it's probably cleaner. Price is expanding. What's the PD array we should be holding? Bullish order blocks. So we have an efficiency here that should be holding price up, as well as this down closing candle range. This paired with this should be your propulsion block on the 5. So if you take the candle bodies there, you don't want to see it trade through that, which is obviously protected by the stop loss. And this would be your opening price. This is where you're going to have the most sensitive area, the wick to the open. That becomes your 5-minute bullish order block. So you can see we're dropping into that, respecting it with the candle bodies, and look at the candle bodies printing above that BISI. That's the precision I want to see. So as long as we're, for the most part, closing within that order block range, I like that as, my bias is most likely correct for the rest. And if it comes and stops me out, we already took 3 limits off and we have 1 stop loss to go. It's, it's not a big deal. The reason I did not stream today, we've got actually a good economic calendar. So I'm looking for that to be, we're going to stream potentially Tuesday, Thursday, Friday. Later today, we will have a psychology and backtesting type stream. I'm not going to attach it to here because I want it to be public. So we'll wrap this stream up, and then maybe a couple hours later, before the end of the day, we will have the psychology and backtesting stream. And if you want to attend that, feel free to. If you miss it, it should be recorded, and I'll post that. I didn't post the Friday stream recording either. I need to do that. So, you could just be waiting and watching. If the 1050 macro offers an opportunity, I'm not going to pyramid in. Not going to pyramid in. Because today, this is going to scare a lot of people, and I'm going to cover this. So, going into the week, I did an analysis, and ICT also provided his analysis, and he was looking for this daily VI. And if you go to a higher time frame perspective and you look at the 60-day IPTA look back data range, we're in a deep discount. Okay, if I go to the daily chart here, you can see my daily annotation. So if you look at the 60-day IPTA look back, that's here. We're currently in deep discount, where we were at the open. So if I split this into quadrants as well, we are opening up in deep discount. So whenever we're opening up there and there's premium arrays that are available, that becomes the draw liquidity. So on the daily chart, there's not really any, swing highs that are available in close proximity. You have this VI as the first low-hanging fruit objective. It can reach up into here. It can reach up into here. But that's not the draw for tomorrow. So going to today, that's the low-hanging fruit. What's obvious that's standing out? Boom, it's the daily VI. Also on the hourly time frame, you can kind of further the analysis down. You've got SMT at these lows. You've got nice displacement up. Obviously, the new week opening gap is kind of showing you that sentiment of where the market's likely to expand towards. And then we have the weekly high and etc. There's not like a huge gap here we're trading into where you gotta be careful of a retracement or reversal. But this kind of daily profile is gonna mess with a lot of people, because I know people who are early on, you like to pattern things. So when you see that it opens up and it just starts trading up, that's gonna scare a lot of people, because you're going to be expecting, oh, if it's bullish, we need to see that open, low, high, close, which is true. Sometimes, though, there's going to be variance that you need to understand is going to be present. And that's why bias and draw on liquidity is the most important thing in the market. If you understand where the draw is, everything else falls into that draw. So if I open up if I woke up today around 9 o'clock, I'm opening up the charts on my phone and I'm scrolling through to see it. Okay, is my bias going into today correct, or is it kind of good PA? Do I want to trade today? When I see it open up and it starts trading up like this, I think that's perfectly fine. Others are going to look at that and be like, oh, it should be manipulating. That's true, but some days you're not going to have that. Some days the open, high, low, close is going to look like this. Some days it's going to look like very perfect, open, low, high, close, where London's creating the low, New York is expanding. Other days you're going to have where it opens up, it drops down into London, and it continues dropping down into New York, and then it expands up. But you're not going to have, sometimes you're going to have no manipulation. It's going to open up. It may have maybe a tick below or something, or maybe not any manipulation, and it just starts trading up. The people who are patterning are going to look at this as the manipulation, and then they're going to short it into 930. Why? Because it looks like it's trading up into 930, but whatever it looks like, it does not matter. Draw is higher, so it's going to go higher. So I'm going to use a BISI at a key time to get in long. If it doesn't offer me that, I'm not going to get in. So that's why in the bias and early in predictions, I was like, I need an early entry. If it's not going to give me that early entry, I'm not interested. Because if it starts trading down and it wants to rebalance the new week opening gap, my bias is wrong. I'm stepping away. I don't want to be flipping bias on this kind of day, because in my mind, we have plenty of opportunities the rest of the week, and I don't need to be trading back into the range in sort of an IRL kind of move. And So I'm expecting that as soon as the 930 opens up, it's going to open, manipulate, expand, and then retrace. Or it's just going to open up and just shoot up there, kind of to complete this energetic move we've already having. So that's what I was looking for this morning, and why I was confident kind of taking that earlier entry today, and getting in early, and not even waiting for the macro time to offer me that entry. Obviously we did have 9:45 news, so it's not a high impact in the sense of it's not going to create a 60-point run. So I don't really look at that as something to be worried about, or really something to be. 9:45 news, a lot of times, if you just completely forget it's there, you're not even gonna notice sometimes. In this case, we did have this larger candle. It did wick up about like 30-40 points, and I'm treating that as inefficient. So if you actually were watching the charts while this 9:45 news came out, it opened up and it very quickly shot up there. Like, it opened and then boom, it was like up here in the first couple seconds. Whenever I see that, I'm thinking about, how is the order book looking? Like, even if you don't follow order flow, if you don't follow level 2 data, if you've ever seen it before, you kind of know how it works. Or if you've seen Bookmap, when it's opening up and it's shooting up like this and it's aggressively offering those prices, there's going to be people within this wick who have buy limits or buy stops that are not triggered. Close back down here, then it prints through that again, and that signature there where it closes through that wick is a very strong algorithmic signature, and that should be filling it. But you can almost treat this entire range here as an inefficiency, because sometimes it doesn't offer the sell side. So that being paired with the bullish order block, etc., is why we have this retracement here, and you can use that as a further confluence as to why price is rebalancing this range. We also do have, there's further data you could be using. You have a 1 hour inefficiency here that I marked out, that we've retraced into and rebalanced, right? If I completely mark this out, you'll see over here. Right? Buying and selling all through that inefficiency until it's balanced, and then it leaves. And then that's why we shouldn't get any touch back into here, because it's a higher time frame inversion gap. But as of right now, it looks pretty healthy, where I'm not worried too much. You can see the precision here of the inefficiency in the order block. Inefficiency here completely rebalanced with the 1 minute candles. So I could trim to here, and it probably should be safe, because that's now an intermediate term low. Not in the fact of it filling a gap, but what do we have? Intermediate term low left, intermediate term low to the right, or short term low to the left and right. That makes this an intermediate term low. So if it was to trade through there with displacement, I'm expecting that to be the true market structure shift if you're someone looking for bearish PA. Right? And in this case, I would treat this as an immediate rebalance. So I want price, the next couple candles, to really kind of accelerate through there. But also notice that this yellow box is a daily VI. So I mentioned last week, trading from IRL, trading into an IRL, there's going to be sometimes you're targeting a gap. And that's when the order flow is pointing to, okay, we're going to now seek premium arrays. And the premium array is either going to be a swing high or an imbalance. That's fine. What I don't want to be doing is trading into an IRL when it's counter bias. So when we have like this, I don't want to be shorting into this gap. I don't know how far it's going to go into the gap. It's also going to be high resistance. Notice how high. This is a perfect example. Notice how high resistance this is. It goes from high resistance to low resistance, which is why in the screenshot, I marked out this as a very smooth and high resistance area that's going to create a low resistance move. So speed. So slowdown creates speed. Speed creates slowdown. It's this constant cycle of inefficiencies to efficiencies. Inefficiencies to efficiencies. Like, it delivers. Consolidation is perfect efficiency. It's a balanced price range. Fair value gaps are inefficient. So it goes from speed to slowdown, speed to slowdown. So I don't want to be trading into this gap because it's going to be high resistance. Meanwhile, I do want to be trading into this gap. Why? Because it's in line with narrative. It's in line with bias. It's in line with order flow. But whenever you're targeting a gap, sometimes how far we dig into that gap is harder to anticipate. So what you want to be doing is refining down the levels. Examples of refining down the levels would be swing grading it. So you take the low end to the high end, you drop a 75%, a 50%, a 25%, and you can put your limit orders on that. The obvious one being the 50% is kind of a clean target that most people use. You also have a buy side liquidity pool within that gap that I can be using. There's nothing wrong with that. And that's you don't need more than that, to be honest, but you're always going to be refining down the levels. It could be trading into here. Anytime we're targeting a gap, the discount end when we're bullish is always going to be a target for me. Like there's absolutely no reason I would be targeting this unless there's, previous day high right up here, then sure, obviously I could be using that. But in terms of a low hanging fruit and like proper execution of trades, I'm always going to be taking at least 20% off of the trade, if not 50%, when it tags that IRL or the VI. Especially when we're getting in near the low of the day. There's no reason I'm going to get greedy and trying to hold it over and over and over again if it's not going to offer to me. So that's why I'm also going to take one there just as okay, might as well just take a limit order off. It's creating a new high at a key time within a higher time frame array. Why not? It makes sense. And then I can trim my stop loss after that. And in this case, if it runs up to the buy side, runs up into here, it's not my concern anymore. And runners should never be your concern. If you're taking off 80% of the portion, 75% of the portion, runners, you set it and you forget. You don't constantly try and manage the stop loss. You don't try and constantly, if you find yourself keep pushing this limit order higher and higher and higher, you're getting greedy. It's a very telltale sign that you're getting greedy in the marketplace. Anytime you're pushing your TP higher, anytime you're moving your stop loss lower because it's trading into that gap or trading towards your stop, you should be realizing that, okay, either I'm getting greedy or I'm showing elements of fear. I'm showing physical signs of fear. I'm literally taking my hand, taking my mouse, clicking the button and dragging my stop loss or my TP larger than what I already accepted. Obviously, there's going to be times where you're like, oh, I missed this key point of data. Let me move my TP to this high or this, and it actually makes sense. Or other times where you're like, okay, my stop loss actually was in the wrong position. Let me move it down slightly so it respects mean threshold of the 5-minute order block. That's fine. But I'm saying, like, when you're in the trade, if I was to take this this TP limit and then move it up to here or up to the next one and keep going, that's hunger in your body that you're feeling is never going to be satiated. It's just you're going to keep wanting more and more and more, and then when that TP is filled, you're going to enter 4 more contracts in the PM session, and then you're going to remove all your profits for the day. So understanding, okay, there's sometimes there's physical signs of you understanding that you're getting greedy or you're getting impatient. I mean, especially if you're watching the P&L, you're not paying attention to what you need to be paying attention to. What you should be doing is constantly looking at the candles. And if you need to completely turn these off and have just the ticks or the percentage up, I suggest doing that. Because as soon as you're just watching this and you're glued to that side of the screen, you're not paying attention to what you need to be paying attention to. So another targeting aspect, if we want to look at further confluences, we have this retracement leg. If you want to measure that and target it, and it puts you up further into the gap. I'm not going to target that. Also on the 1 minute, you also have this retracement leg here that targets right on that previous week high. So another kind of further confluence. And then you have the opening range between the 9:30 and 10 o'clock high and low. That puts you further up as well. So everything is pointing to higher than my limit order. But do I need it to go all the way up there? Do I need to get the low of the day to the high of the day? No. I just need to get my chunk of the move, my bread and butter setup, and get out. And this is not going to be everyone's bread and butter setup. This is almost the entire AM session range, which is not going to be possible for someone starting out in 3 months in. So do not look at this execution, whether you're watching it currently on the live stream or on the recording, as something that 1 is going to be possible to do every day, and 2 is going to be even possible to do at all when you're starting off. This is my first kind of high to low of session trade in the past maybe 2 weeks. Like, I think if you go back into the stream trades, we've not seen this kind of clean PA in a while. And in a sense, you're a sniper. You're stalking your prey. You're stalking your prey. Or you're like a lion. You're waiting. Sometimes, you're going hungry. So you may have to take the little scalps, the little bunnies as they go by. But when you see that gazelle and it literally prances in front of you, you got to be ready to pull the trigger, and obviously pulling the trigger and accepting the risk. So there's going to be days where you wait 4 days, or there's going to be times where you wait 2 weeks, and then it offers itself, But then are you placing so much expectation on that trade being a winner that when it loses, you crash out and you over leverage over trade, right? So even when these things arise and even when your patience is wearing thin and your anticipation is growing, you still have to understand this market is here not to help you, but to harm you. It takes 2 seconds. So that's why obviously we do have a winning trade here, but I am extremely proud with how I managed the trade, how I got in the trade, and my execution and rule, just following my rules of where I'm placing my stop, where I'm getting in, what times I'm getting in. That to me, and having the patience from last week as well, not executing on Friday and Thursday, that makes this trade feel so much better. It's not boosting my ego, it's not doing anything like that, but my dopamine and my confidence is built in my execution, not in the outcome of the trades. So when I know, okay, I'm doing well, like I'm actually doing my job properly, the wins feel great, the losses don't feel as bad, and you can stay mellow, you can stay level-headed. All right. So this trade probably is going to go to the last TP based on the order flow it's showing right now. It really wants to get up there. We have another BISI forming on the 5-minute with a bullish order block. It's just expanding. And this is the beautiful PA you want to see. And we've been waiting for so long in March. And we actually have a good economic calendar week. And you can see this completing it out. Now, another thing I want to mention. Let me pause so I can give it a break. Been yapping for a long. But when Friday's inside this range and it's consolidating, it doesn't really offer any movement. You look for Monday to offer movement. Guys, with the PDF, you know that there's more criteria, but anytime you have this kind of Friday lethargic movement, especially if it does not complete the weekly objective from the previous week, you look for Monday to run out the previous week high or low, or kind of finish out that objective from the previous week. All right. So I know you could watch it maybe into noon. If my limit order is not hit by noon, I'm most likely just going to close out the trade manually. I don't want to be trading it and holding it into PM session. Even if it goes all the way to 1600, I could care less because we have plenty of opportunities this week to execute. All right. My entry was the close of 945. Well, I love it. I like that. May have gotten stopped out there, but hopefully not. Do we have a previous day high 2120 before the VI? Would you not trim aggressively there? 2120. Unless I'm 2120? Oh, 2020. I see. I'm not sure what the question is, to be honest. Oh, I see. Yeah, you could. It's all personal preference, I guess. A lot of large wicks back and forth this AM. Would you classify this as high probability PA delivery? I would personally. Maybe it's just because I was looking for something very, very specifically in the terms of like I'm looking for the VI to be traded to, and it's got to be early morning. So I guess in that sense, it was high probability for me. But this is why when I released that PDF last week on the high probability versus low probability days, at the very bottom it says my high probability and your low probability are going to be different. The way I categorize it, the way I like to see price action is going to be different. So I personally will classify this as this is tradable and this is high probability because it's actually showing me elements of clean delivery. Although there's a lot of wicks, it's still semi-clean delivery. Same thing on ES. It's a little bit more wicky, but when you look at the 5-minute, it's not bad, right? But that's why, sometimes you're going to be, and if I got it wrong, say I got stopped out, that's a day where I'm looking at this where it's following most of my rules. I'm deeming this as a high probability day where if I were to take a trade and lose, that's fine. And that's really the most important thing about high probability versus low probability is just understanding what kind of conditions do you want to be trading in that you're most happy with the losing trade. Like you can take the losing trade and you're like, all right, that's a good trade. Low probability days is where like you take a trade and you either know you shouldn't be taking the trade, or two, when you take the loss, you immediately try to get back in and flip, or you over leverage and over trade because it's like, it's uncomfortable to lose, if that makes sense. So for me, this is a high probability day because it's giving me exactly what I want, like play by like candle by candle, 5-minute candle by 5-minute candle, where if I take a loss on this day, it's just another trade to me. Does that make sense? So whether you determine this as high probability versus low probability is really up to you, not in the sense of is it readable? Sure, that's true. But is it readable? And if you were to take a trade, or if you did take a trade and you lost, would it be easy to manage? And if you took a win, would it be boosting your ego, right? There's two sides of the coin there. All right. So as we continue into the lunch session, obviously we're looking for the higher prices, and my stop loss is here. I'll update with you guys with whether or not this is tagged. I'm actually just going to put an alert. This is the best thing you can do for runners. Sometimes you just put an alert slightly below or underneath the your stop loss, and you just set it and forget. And if you have the mobile app, you just allow notifications on the mobile app, and you'll get pinged basically if you get stopped out or TP. And I'm not going to constantly be opening up TradingView to look at if my limit order was filled or not. All right. And that should be it for the most part, I think. I covered everything I wanted to cover. I would suggest for those who weren't able to follow along earlier in this stream, either to go back in and watch it, or follow along every single screenshot that I provided today in the predictions chat. That's literally play by play exactly what I'm looking for, and the execution management in there. So although we didn't have a stream this morning in the terms of like, here's an entry, get in here, get out here, those predictions chats should be assisting you in the learning aspect of what I was looking for and what you could look for in the future. All right. So we'll have the backtesting stream later today with the psychology. Bring your notepad and pen if you want to. I'll try and drop some good psych stuff in there. And then obviously any questions that you guys have, bring them, and we can cover that. So I wish you all the best for the rest of today. Obviously journal, do the things that are necessary to succeed, and I will talk to you guys soon. Peace.
Yo, Haitian, go crazy with it. Go crazy with it. Hey, yo, wavy, where you at, nigga? Yes, sir.
know they're out there, don't you?